So they're now not able to be used because Janet's not spending it yet. So that money comes out of the system. That's a liquidity withdrawal. Okay, so that's what was driving tech down and crypto down.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto, considering the significance of liquidity as a key factor in determining the risk associated with assets, especially growth assets such as cryptocurrencies and technology stocks. It is worth noting that these growth assets have historically taken the lead in market cycles due to their strong dependence on liquidity, rather than the business cycle itself. In contrast, assets like the Russell 2000 or oil companies are more influenced by the business cycle. Just like any financial analyst would say, the performance of various sectors, such as gold miners or technology stocks, is heavily influenced by the business cycle. Currently, the ISM index is facing difficulties in rebounding, indicating a struggling economy. However, once the cycle turns upward, cyclical stocks are expected to perform well. It's worth noting that the technology sector tends to lead the way, often by more than a year. Additionally, it's crucial to closely monitor liquidity trends to gain a better understanding of the market dynamics. And lots of things Raoul Pal discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
If we think that liquidity is the biggest driver of risk assets and particularly growth assets, crypto and tech are growth assets. If you remember, they led the cycle because they're driven by liquidity and not the business cycle itself, which is what drives stuff like the Russell 2000. Or oil companies or gold miners. They're all driven by the business cycle. And we see that right now, the ISM is struggling to turn higher, and then we'll have an upcycle, and those stocks, those cyclical stocks will do well. But technology way leads that by over a year. And if it's driven by liquidity, we need to understand what's happening with liquidity. And Mike Howell was with you last week, I think. Mike's always excellent on this. We produce a lot of work at Global Macro Investor and Real Vision Pro Macro on this. And its liquidity in the US at its simplest level is driven by, it's called Fed net liquidity. It's driven by the balance sheet. Is it rising or falling? Well, right now they're doing QT, so they're taking liquidity out of the system, but that's offset with the reverse repo. They've been draining that. That money goes into the market, into the short end of the bond market. That's been adding liquidity, and that more than offset the Fed. Then there's Janet Yellen and her checkbook, the Treasury General account. That's her current account. And we had this liquidity withdrawal from the system based on the fact that there was a reasonably big tax season because the economy grew reasonably well last year. Those taxes come out of money market funds and go into Janet's checking account. So they're now not able to be used because Janet's not spending it yet. So that money comes out of the system. That's a liquidity withdrawal. Okay, so that's what was driving tech down and crypto down. Then what happened yesterday is two important factors. One is Jay Powell said, hey, listen, guys, we're not quite ready to cut rates yet. We're definitely not going to raise them, though, but we're going to do less quantitative tightening, but a lot less, from 60 billion down to 25 billion. So that's if you think of quantitative tightening as the Fed putting its head on the beach ball, you take it off, it rises. He's allowing liquidity to come. On the other side, Ellen said, well, what I'm going to do is I'm going to buy back some of these illiquid bonds at the long end of the bond market. Those illiquid bonds, that's just a recycling of liquidity into a less liquid part, but it's adding liquidity into the system. So both of them signaled, we want to add liquidity here. So that was good. The Japanese intervened. They're selling dollars, selling of dollars, intervention of liquidity. So there was a lot of liquidity came back in. And the point being is what we saw with the markets drawing down was liquidity coming out. What happened today and yesterday in crypto, it kind of figured this out immediately, was liquidity is coming back. So that's really the big driver here. As I've said in the everything code work, is all of the central banks have to fund their government's debts, and they all have to work together, and they
Mhm.
all have to get interest rates lower, and they all have to put liquidity in, because if not, the numbers don't work. And so that is the game that's actually at play here. Everything else is basically noise.
According to Arthur Hayes, the former CEO of BitMEX, he believes that Bitcoin has reached a local bottom and will gradually slowly climb back up over the next few months. In a blog post on May 3rd, I discussed the recent market slump and how the price action unfolded according to my expectations. Bitcoin experienced a local low of approximately $58,000 earlier this week, but I anticipate a rally that will push it above $60,000. Afterward, I believe it will trade within a range of $60,000 to $70,000 until August. According to Hayes, the recent 12% decline in Bitcoin was seen as a necessary correction in the market. He attributed this decline to various factors, including the tax season in the United States, concerns over Federal Reserve decisions, the sell-off triggered by a news event, and a decrease in inflows to spot Bitcoin exchange-traded funds. This correction, which amounted to a 23% decrease, marked the fourth time in the past year that a similar magnitude of correction has occurred. It is anticipated that the cryptocurrency markets will gradually recover following the recent decline, which was influenced by the increased availability of US dollars due to the Federal Reserve's reduction of monetary stimulus. QT tapering and the debt issuance of US Treasuries. By tapering QT, the Fed's plans effectively increase liquidity in markets, potentially leading to an influx of funds into riskier assets like cryptocurrencies, resulting in increased buying pressure. AES sees this as a discrete injection of funds, which bodes well for assets with higher risk. These recent announcements from the Fed and Treasury have had a positive impact. It seems that there are some stealthy methods of increasing the money supply. The gradual injection of billions of dollars each month is expected to mitigate any significant downward price movements. The speaker also anticipates that prices will reach a low point, experience some volatility, and then gradually increase. This prediction aligns with the previous statement. Many experts, including financial analysts, are also predicting a sideways market for the next few months. Founder and CEO of Wilshire Capital Management, Jeff Ross, expressed his continued confidence in the current market conditions, despite the prevailing negative sentiment. In a recent post on May 2nd, he acknowledged the Federal Reserve's shift in rhetoric as a move towards improved liquidity conditions. Ross also noted that analysts and traders who are predicting the end of the Bitcoin bull market may be mistaken, as he believes the true bull market has yet to begin. He concluded by stating that institutional crypto brokerage Matrix Port restated its forecast that after acquiring Bitcoin, it typically experiences a period of sideways movement for 4 to 5 months, as seen in past occurrences. The price of Bitcoin saw a 4.2% recovery during the day, reaching $59,800 at the time of writing. However, it is important to note that the asset is still down 19% from its all-time high in mid-March as reported by CoinJacko. Let's get back to Raoul Pal interview.
Not looking at inflation. Him and Janet are going, we've got 10 trillion of bonds to refinance. How the fuck are we going to do that?
Yeah.
We can't quite get the excuse to cut rates yet. So we're going to have to add some liquidity in here somewhere to get somebody else to do it.
Yeah.
And that's what the game is. The whole game for them all is the same. For the Japanese, the Chinese, the Europeans, the UK, and the US, it's all the same game. I haven't watched this one yesterday. I watched pretty much everything he does because I try not to listen to what he says, but listen to how he's saying and the context that he's giving. And this is what a discussion David and I have had at length that we go backwards and forwards on, is every time I listen to Sam Altman, his guarded manner of speak suggests to me their advancements internally within OpenAI are much further than people understand. It is my personal opinion that they are building AI software products with AI, which is why 500 people can be so fast across so many verticals and disrupt everybody every 3 months. We're going to have the OpenAI developer conference in this month sometime. My guess is and this is where David and I have been discussing this, my guess is going to be another step change. And every time, it was really interesting. I can't remember who was interviewing him, Lex Fridman, somebody. And somebody said, oh, that was a shock when Sora came out. He said, damn. He said, we should have throttled back a little bit because we don't want to shock people too fast. Which makes me think, and I hear this language from a lot, he's super guarded. And what he's trying to play is a game of beating everybody, but not moving so fast that the regulators shut him down out of fear.
Exactly.
And then he's saying, you need to regulate us, but he's moving so far ahead. It's a very clever game he's playing, as are others. Anthropic are doing the same. They're like, you've got to protect everybody from the AI, but we're great. And
right.
We'll be okay.
Protect against what you know. Meanwhile, we're doing a bunch of stuff that no one knows about.
You know, for those people who, there's another big discussion. We won't have the full discussion now, but this is so important. There's one company that David presented at the Global Macro Roundtable in Marrakesh week before last, TSMC, that is so important that nothing gets manufactured without literally nothing. And that is Taiwan. And this is what the whole China-US clash is about. It is so important that it's geopolitical. And we think there's going to be a resolution. I will write a bit more about it in due course. But this stuff really matters in the game of nation states, and it may even matter more than oil did. This is how big and important this is. And
absolutely,
we think some of these companies are big now, Microsoft, Tesla.
Bitcoin experienced a significant 23% decline from its record highs in April and May. Currently, the chances of a recovery in BTC price remain uncertain. The initial discovery remains low, but there is a need to reclaim $60,000. Unfortunately, the trend lines that are protecting this level are currently prevailing. Bitcoin's 100-day moving average, which is currently at $59,900 as of May 3rd, has been serving as market support since October 2023. It has provided a solid foundation during the first half of the 2023 Bitcoin bull market. However, at present, the price is showing a downward trend. The daily candles below it, along with an accompanying chart, revealed one of our proprietary trading tools flashing green on the daily time frames. If Bitcoin manages to reclaim the 100-day moving average, it would be a significant development for the bullish investors. This could potentially trigger a short squeeze in the market. Keith Allen, one of the co-founders, expressed his thoughts on X, emphasizing that facing rejection can be quite challenging. He highlighted a significant trend line that closely aligns with the $6,000 mark in his recent commentary. Caleb Franson, the CEO of Cubic Analysts, personally selected SRP as a resistance level to clear, setting a benchmark for Ryson. Achieving a daily close of $61,000 is the goal. There is still a significant amount of work to be done, he concluded. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.